first and foremost, what's up, YouTube? Because it will be uploaded to YouTube. And what's up, Capital Powerhouse? Because this lesson is going to be added to our folder. So we're going to go over a lot in this video. I'm actually going to cut this into two parts. First part, we're going over last week's trades. Second part, we're going to be going over the crypto dip, stock dip, thing that's going on. And I'm going to go over what I'm looking at. You guys don't have to buy cryptos, but let's just say I have been doing my research and watching some stuff. So we're definitely going to look into it. If you caught Bitcoin last night at 42K, you are one of the luckiest people in the world, because I'm about to show y'all that literally happened in like 3 minutes where that dip came about. For real. And I'm mad because I was in the middle of, I wasn't paying no attention. I'm gonna just be honest. I wasn't paying no attention. Last night, I looked at it and I was like, hey, it just hit 48K. But in no way possible did I think that this thing was going to dip down in the next minute. This is where I looked at it, like up here somewhere. And then literally, it dipped down in like the next 3 to 4 minutes. So I was in the middle of playing Warzone. That's why I said like I wasn't doing completely nothing. I should have just been paying attention. But starting to get a little volatile now. And we just created a lower high from here to here. So it broke this level. Coming back and retesting it right now. So what I'm hoping to see is just come back down to like 42K. If it do that, then we all good. I'm talking about like, we gonna be looking pretty good. I'm gonna just say that. I already told y'all last night that I'm looking into buying that deal. Don't know when it's gonna happen, but we know it's gonna happen. How do we know it's gonna happen? Because look at how this candle wicked out. It's just an indication of where the market wants to go. Nah, you're not too late, bro. You're not too late. Actually, y'all are free to talk in these Zoom calls, by the way. Like, y'all don't have to keep y'all mics muted. Y'all are definitely free to talk. But
can you hear me?
Yeah, I can hear you.
All right, yeah, but, my bad, bro. Had some stuff going.
Are you good, bro?
All right.
Me myself, I'm literally in the middle of updating my laptop.
So we on Bitcoin. All right, but
yeah, I was just going over. I ain't went into deep detail yet. I was just going over, but I am about to dive into gold first, though. Gold, we about to get into gold first, because I don't think I ain't take most of my trades on gold, but I did take a good portion of them. And the reason why is because I saw that it started to play out exactly like how I wanted it to. So, y'all know with gold, we were looking for buys initially, but as the week went on, more news started to come out about the US dollar, how the economy was shaping up, and how things were going. Well, we started to find more areas, started to see smaller structured areas and stuff like that. So we adjusted a couple of things as we did with about every other single pair. If you guys were paying attention to the chat, hopefully you guys were, because you made some money this week if you were paying attention to the chats. I told y'all exactly what was going to happen when the news came out, and it did exactly that. So first, let's start off with the DSY. I'm going to go with the DSY because this explains a lot of what happened throughout the week. So we got this trend, right? We were marking up this trend, and we said 4-hour chart would probably be easier to read, yeah. So this was the trend on the DSY. If you guys do not know, the DSY represents the US dollar, And it basically, you look at this just like you look at every other chart that we mark up. You have what we like. You will have your support and resistance. You will have your trend lines, all that good stuff. And here we had a trend line, right? Well, last week it broke. So this week we were looking for the retest of that trend line and for it to drop. And that's exactly what it did. And if you guys noticed, during this drop, the US dollar went down. A lot of pairs went down, like USD JPY, USD Cad. All those pairs went down, while Euro USD, Gbp USD, and Gbp USD went up a little bit. But gold went up, and all those other pairs that have the US dollar as a secondary pair, those currencies went up. So that happened, and then you guys know about this already. When Chairman Powell spoke, he talked about, do I still have the article up? Let me see. I do not think I have the article up still. Nope. But I did talk about it in my video earlier this week, where he spoke and literally how he used one word, raise the US dollar. So I want to say they were talking on inflation. I want to say, I think he was talking about inflation, because if you guys, we live in the US, you guys know how inflation been rising, stuff like the prices of everything just been rising. And that's what he talked about, and that caused the US dollar to literally go up in this one candle, but it corrected itself. It started to consolidate a little bit. Everything started to calm back down and stuff like that. But that's what happened with the DSY. So now let's get into gold. And you guys, look, this reflects literally in every single currency pair that we're about to go over. Like that big long candle that was in the US dollar, it reflects in gold. This is it right here. Gold was buying up, it was respecting the trend line, and then boom, it just started selling out of nowhere. Like, this is when all of that happened. So I'm telling you guys, like, once you start to notice little small things and stuff like that, even just paying attention to fundamental analysis, a lot of stuff will coordinate in the charts. Small stuff, like if Euro USD is going down, then USD, is it USD JPY? Yeah. If Euro USD is going down, USD JPY going up. If USD JPY going down, Euro USD is going up. If the US dollar goes down, gold will go up. Like stuff like that. So we're gonna go over this buy first, because that was the initial trade, taking a buy at this trend line. And that's, we caught all the way to TP2 on that. I want to say it went up 20 points actually, but let's go over it. Let's see. So we knew that the market was respecting this trend line, right? Because right here, when it came down and tested it, you guys see this wick right here, this rejection. This is what we call a rejection in the market. When a candle wicks out like this at a structured area. So it not only wicked out at the trend line, but we also have a demand zone right here. So a demand zone works just like a support. Basically, if you guys do not remember, your demand zone works just like a support, but we know a support line is the price of like a specific price point, but a demand zone marks up a specific area. And if you watch my previous video, you guys know I like trading areas more so than specific points, because the market can go past points, but it rarely go past that whole zone unless it's in very strong momentum and stuff like that. So it's basically like a buy zone. A demand zone is a buy zone. Supply zone is a sell zone. It's SDB. So just coordinate those two together. But we I did hop in before I got the two engulfing candles, mainly because this doji right here. We had this, the candle started to get smaller and smaller. Then we formed a doji. I was like, okay, this is about to buy up. It's probably not going to buy up a lot, but I know I'm going to be able to catch at least 10 points off of this. You get what I'm saying? So this is where I pop the entry. But you guys know I usually like hopping in once it breaks like a structured area and stuff like that. So you cannot trade major structure unless you're able to trade smaller structure. So let's look at the smaller structure. We're going to replay this all the way back to here. And let's go down. Okay, there we go. I go down 15 minutes, so that's where I pick out my entries. So, smaller structure, right? I showed you guys where I entered it, where that doji was formed. But if you guys look here, this is where that wick rejection happened. And this is like another little area right here at the bottom of this wick. This is where support formed as well over here. But if you look at the 15-minute, right, what do we see gradually happening? The market is creating higher highs and higher lows. Boom. And boom. These are the higher lows, and you guys see the higher highs happening. Boom. It broke this level over here. Boom. It broke this previous high over here. And then that's when it bought up. You guys see that? So on the smaller time frames, the market is continuously breaking smaller highs and lower lows and higher highs. Like, it's showing us that the market wants to go up on a smaller time frame. Now, yes, the market can change direction more and more, or I'm not going to say more and more, but it changes direction more often on smaller time frames. But think of it like a year in real life, right? You said what?
My fault, you good.
Okay. Well, we know days make up a week, right? Weeks make up a month. Months make up a year. So it's just like how you read the chart. 15 minutes make up 30 minutes. 30 minutes make up a 1 hour chart, or 1 hour candle, and then a 1 hour candle, or 4 1 hour candles make up a 4 hour candle. So that's the same way that you would read the chart. Just like all these other things make up, like the days make up a year, all of these smaller time frames make up those major structure levels, right? So you got to be able to read the smaller structure in order to be able to trade the bigger structure. That's why they say that, because you can't expect to go in and trade on a 4 hour time frame. That's why it's very important to learn how to read every single time frame. You can't go in and just trade on the 4 hour time frame and think you're going to be profitable. No, you got to understand what's going on in the smaller time frames and know how to read those as well. So we got our higher highs and higher lows, showing that the market is respecting this demand zone and it wants to buy up. So from here on, the market consolidates for a little bit, but it still continues to create higher highs and higher lows. Guess what? This is still valid right here. I'm glad that this happened. Why is this not a break of structure or a sign of reversal?
It's still,
you said what?
So you said it's still consolidating, right?
Yep.
Because the candle didn't close below.
Exactly. The candle never closed below the previous low. So it still came right back to our previous higher low. And since it rejected right off of that level, guess what? It's still valid for an uptrend. It is still valid. Unless it breaks below this line right here, then an uptrend, or the market is still in the uptrend, which means the market is still going up, to make it simpler. But that's why a lot of people, like, when they see the market start consolidating or it may go down a little bit, they get scared and then close out. Why? You have no reason to close out of your trade right here. And most of the time it's because they're over leveraging. Let's be honest. If you get that feeling in your stomach, it's because you're over leveraging. Just being straight up. I know, because trust me, I'll probably over leverage about more than anybody in here.
Just to make sure, over leveraging is in taking too much risk on, as far as like.
Yep. So, you're exactly right. Basically, putting way more money in than you can afford. Like, that's like going to go buy some $300 shoes with $400 in your account. Like, it just don't make sense. So that's where that comes in. But if you manage your risk, or if you use proper risk management, then you're looking at this like, okay, I'm still straight. Like, it ain't close out, I'm good. Or it ain't close below, I'm good. I can still hold this. And then we ended up continuing to going up all the way up to our zone, hitting our TP. So that was the first trade for gold, right? We just went looking at it from a major structure all the way down to a smaller structure. So I showed you guys where I entered at, which was, let me delete some of this, because it's gonna look like lines on the higher time frame. So that was why I entered on the Doji, because it looked like a Doji on a smaller or bigger time frames, but on the smaller time frames, you can actually dive deeper into it and see what is going on. We saw what was going on the smaller time frames. It was creating higher highs and higher lows. So we knew the market wanted to go up. Plus, you guys know a Doji is a neutral candle. You want to see candles like that at structured areas. Because usually, from my experience trading, right before reversal happens, or right before the market makes a move in the direction that you want it to go in, a Doji usually forms. And if you do not know what a Doji is, this is what a Doji is. We could look at both Dojis that happen at the areas that we wanted. Like, we would have won both trades. I was only able to catch one. So this Doji right here, what happened? Market bought up, hit TP. This Doji right here, what happened? Same thing. If you would have entered right here at the trend line and also at the demand zone, right? What happened? Went up, hit TP. You would have smacked TP twice on the same exact trade. Like, perfect setup. And then even here, I probably wouldn't have took this one, but the main reason why is because of this second candle right here. It definitely would have came and stopped you out. If I'm not getting a Doji or you guys know I like 2 to 3 engulfing candles, or 2 to 3 consecutive engulfing candles before I enter a trade. But look at this candle right here. Look at this candle right here, like right before it comes back to the trend line. This one I would have waited. Why? Because this is a lot of momentum coming into this structured area. A lot of the opposite momentum coming into this structured area, right? This is a long candle. This candle sold down for, from 1807 to 1784. That's a long candle for a 4-hour time frame. In gold, at least. And even if we break it down to the 1 hour, what do we have? We have consecutive bearish candles. We have 1, 2, 3, 4, 5. We have 5 consecutive bearish candles. So I would have waited, even like right here in real time right now. or it's not real time, but even right here, I'm still not finna enter that. Like, no, I'm finna sit here and see what's finna happen. So that's not what you want to see, or that's not what you want to see when the market is approaching a structured area. Look at here on the 1 hour. What is happening? The bearish candles are getting smaller and smaller as it approaches our structured area, and then boom, it takes off. Look, these candles are getting smaller and smaller. That's exactly what you want to see. Same thing. Oh, forgot I was on that. But same thing over here, right before the doji formed. What is happening? The candles are getting smaller and smaller. That's what you want to see. That is telling me that sellers are losing momentum as they get closer to my structured area. This is exactly what I want to see. I want to see them lose momentum. Why? Because they give buyers time to come into the market and take back control and shoot this market back up, at least to the next zone or the previous zone that we were trading off of. So where we could trade zone to zone, we have an area or a point of interest where we know we want to take our trade to. That's another thing. Know where you want to take your trade to. So to sum it all up, it's basically what you want to see whenever you are about to take a trade. You want to see, for one, the opposite, whoever it is. Like, let's say you're in for in this situation where we're trying to get in for a buy, right? We want to see sellers losing momentum as the market gets closer to our area where we want to take a trade. We had that. All right, next point, we got a doji candle. A doji candle is a neutral candle. Usually when we see those candles, we know that a reversal is about to happen, or something is either going to call like a minor pullback or something. At least we could capitalize off of that, that situation right there. So that was that. Now I did have some more areas or some more points on why I took this trade. We had major divergence going on. Now that was at this point right here, but still market was just giving us consecutive confirmations on why we should take this trade. So that was for the buy. Now, you guys know I marked on my chart Sunday, right? Then Monday, we came back, had some more markups. Now, I told y'all if gold break this trend line, it's going to retest. Why? Keely, you remember what happens if the market breaks the structure? What happens right after? Well, I'm not going to say right after this, but what happens eventually, right? After a break of structure. You remember?
If it breaks structure, then that's not a retest. It's
a retest. That's right.
Oh, it is. All right, say that.
Yeah, you're right. But after it breaks structure, the market tends to come back and retest. That's exactly what happened right here. Now, it's crazy how our fundamental analysis lined up right with our technical, right? That's crazy. Because as soon as it broke structure, that's when Chairman Powell spoke, right? That caused the structure break, right? Then right afterwards, some more news came out, and it allowed gold to recover a little bit, but it recovered right back to our trend line. And then look at what markups. I said it was going to come here, come back up, then drop again. Now, I don't know what type of traders I got in my little Telegram chat. I know some of y'all are aggressive. I know it. In my other Telegram chat, I know some people probably caught this buy up here all the way up to the trend line, then probably tried to get in for the sale as well. But I was just looking for the sale. And ain't no telling how deep or how far this was going to go. I was just looking for the retest. And I say that because of how long this candlestick was right here. It was pretty long. So either the market was going to continue selling down, come back and retest later on, or it was going to do what it did here. So it went ahead, came back and retested. I knew it was going to drop right after the retest. And here in this area, now, let me go down to the 1 hour. Now, on this retest, what I told you about, well, I just went over like momentum candles, right? So I was hesitant to enter on this one because of this bullish candlestick right here, right? And then I saw it start to drop out. Like, oh, I just missed this trade. You know, it is what it is. Oh, well. But what happened? Market came back up and retested again. Because bulls are fighting right now. Like the bulls and bears are fighting right now. They know that this is a very important level right here. This is an important level, right? Because we see even off of this momentum candle for the buyers right here, it's still sold down for the next 3 hours. We had 3 consecutive selling candlesticks. So that, for one, proves to me that my trend line is marked up correct. My trend line is a level of structure that I can use and trade off of, right? That's the biggest confirmation that we needed from here. Because if this would have kept shooting up, then we would have had to look at our trend line like what you got going on? Like, did I not mark something up correctly? We would have to go reevaluate the whole trade. But because this happened, that showed me that my trend line is a level of structure. It is marked up correctly. So luckily we were able to get another chance to re-enter this trade. And this one I like much better. Because look at what's going on. The second time that it retouched. Right? Look at these candles. Rejection after rejection after rejection. We're just waiting to see who's about to win. We're just waiting to see who's about to win this battle. So, boom. 3 consecutive candlesticks like this usually indicates that sellers won the battle and that this market is about to at least sell back down to the next zone. And that's exactly what it did. So, this, I would have entered the trade at the opening of this candlestick. Now, I didn't enter here, but this is where I would have entered. Right here at the opening of this candlestick. And I think I entered somewhere around here. Let me see. Go back to my trade history. All right. So I entered at 17. Oh, I actually entered higher. I entered at 1787. 1787.47. So yeah, that was where I entered. I entered higher. But I was able to catch that trade all the way down here. But this is where I really would have entered. Right here, not really good confirmations. But right here is where you have your confirmation that the market is about to sell down. And this is a strong, or this at least about to give you a couple pips. Now, if you look here as well, we have a minor structure, right? We have a minor structure of support. Actually, I could bring this all the way back right here. Because this is how you can tell a pullback zone on smaller levels. So right here is where buyers really took control, right? How do we know that? Because of this candlestick. It tells us, hey, Buyers won this battle. We about to push this all the way back up. This is a very long candlestick right here. So whenever you are trading, you want to look for stuff like this. You want to look for trades like that, because more than likely, if the market pulls back to an area to reject off of again, it's going to be one of those areas. And most of the time, that's where an order block is placed as well. So market pulled back there. What did it do? It rejected and it bought back up. And that's what gave us a second opportunity for that entry or to catch another entry. So rejected right here, came back to the trend line. What did it do right here? It rejected again. It rejected again, bought back up, but it didn't buy back up like it did over here, right? It didn't buy back up like it did over here. So that tells me, okay, maybe this is not about to reverse into an uptrend, because if this would have created another higher high, then yeah, we would have been looking for buys now instead of sales. But because it failed to create a higher high and a higher low, we were able to trade with continuation of a sale. So that's why we were comfortable with that trade right there. So now you guys saw my markups, my future markups. Let's dive deeper into this now. So I showed y'all where my entry was for the sale and why you would enter right here. Did that make sense to y'all? Like, did y'all understand that?
Yeah, with the 3 consecutive candles. Well, for you to make sure like it's for sure that you actually gonna sell.
Yep.
You have to get your confirmation with that. And it'll be the same thing for if it bought up, I guess. Sorry.
Yep, that's right. So you guys know there's always structure within structure. Always structure within structure. So here, we just caught the sale, right? And in between that sale did have a little pullback, which gave us a point A to point B for a downtrend. So our primary trend was the uptrend, right? Well, at first it was. It just broke that uptrend, and now we're creating a downtrend. And if you want, you could even spread all the way back to here. But now we're looking at a downtrend, right? And I didn't catch this buy mainly because I didn't see this. I'm not gonna lie to you. I did not see this until now when I was marking it up. But mainly because I was already done trading for the week. I was done trading for the week. So we dive into this downtrend now, and it rejected off of this point again, which is a support level that I marked up that dates all the way back. So we got this rejection, and then boom, we got the break of this downtrend. We got the break of the downtrend, right? It broke this level of structure. What was going to happen? It was going to have to come back down and retest. What did it do? Came back down and retested. Now what's it doing again? Buying up. And I entered this trade, but I didn't catch the full totality of this trade. I entered at 1770.59. And I closed out early because I had a feeling that it was going to buy up, mainly based off the fundamental analysis of this trade, but it just kept going back and forth. Like I was in profit right here, and then I was out of profit. It just kept going in and out of profit, and I was like, I don't feel like I have enough to really hold this trade, so I closed out of it, and I think I lost I lost 13 cents. It wasn't no big deal to me. I didn't care. So it was just, it is what it is. If it sells down, I know where I want to buy. If it buys up, I just missed opportunity. Well, I sold the bag, basically. So I ended up selling the bag on this one. I'm not going to lie. I sold the bag on this one. So it bought up. And if I would have had this marked up, I would have held. But like I said, I was really done trading for the week. I was just trying to see what I can get out of this because I just kept saying that it kept rejecting. So I was like, yeah, I might hop in for a buy. And the fundamental analysis was kind of lining up with it. So I was like, I'm finna buy. So I ended up buying it, but I closed out too early. So it broke this trend, this minor trend, and came back and retested and bought up. Like I entered at 1770 to 1783. It bought up 13 points. So I would at least hit TP1 on that. Well, not at least. I would have hit TP1 on that. So yeah, that's just like trading minor structure within major structure. That would have been a good trade to take. Little side trade to end off the week on a good note. So yeah, that was pretty. That would have been nice. But I just wanted to show y'all that just because I had just saw it. Let's see what else we had. So here. No, we didn't have like any divergence or anything like that. But that was our gold trade of the week. Very good trade. Very good trades. Now let's dive into Euro NZD. So, Euro NZD, we were looking for sales because we had divergence for a while. I'm not gonna lie, we had divergence for a while sitting on Euro NZD, and I hopped in like very key note right here. Just because you see divergence does not mean it's going to drop right at that moment. Just because you see divergence does not mean it's going to drop right at that moment. So that's why you want to use like other things as well to help you enter a trade. But we had divergence going on Euro NZD for a while, even on our daily time frame, which is why I took this trade. Like, go to the daily. What's going on here? It is on the market, or in the market, going by price, right? The market is going down. But on our chart down here, it's going up. So that lets me know, like, okay, this market wants to sell. And we're definitely going to catch this sale next week when the market opens back up. But it may come back all the way up here and retest this. I'm going to go over that on Sunday when we mark up our charts. But I did catch this sale because it came down to a structured area. Go back to the daily. So here we have a level that was a demand that I felt like was going to become a supply. I marked up the demand and I marked up this area because, for one, obviously there's structure right here, right? We can even spread this all the way back to here. Market kept rejecting off of this area, or out of this area. I mean, it rejected right here, bought up, came down here again, and it bought up. Okay, something is going on over here. You know, there's obviously buyers in this market, right? So came back down again and it consolidated, right? So we go to the monthly. If you look at the monthly, what's going on? You guys see these candlestick rejections or these wick rejections? So this has been going on for the past couple of months, where we kept getting these wick rejections, right? And that's why I feel like wicks always tell you where the market is wanting to go. We got this wick rejection all the way right here. This was all the way back in February. And then it didn't come down here until October. So wicks usually tell you where the market wants to go. But let's go back down to our 1 hour. But you guys see, like, that is a monthly level right there. That is a monthly level. So that's why I marked that up. Now, when the market came back up to this area, I was like, okay, I know it's going to sell. It's a matter of when it's going to sell, right? And I wanted to sell it once it broke this trend line. So we did sell. If my chart will move, there you go. So let me zoom in. I didn't sell up here. I did not sell up here, but I did sell right here, I do believe. Let me be 100% sure, because 158. So yeah, around it, yeah. So I did sell around this area. So it broke around the trend, right? It broke this trend line, came back and rode the trend. Like, it was literally riding right on the trend line, but it never did really show that it wanted to go back above the trend line. You guys see what I mean by that? Like, it never was showing like, okay, we're going to continue to respect this trend and we're going to continue buying up. No, it kept going back and forth. We got a buyer, two sellers, buyer, but this wasn't like just all the way up here, right? It didn't come all the way back up to this level. Then we got this selling candlestick. So it just kept going back and forth. So I'm like, okay, I think I want to count this as a structure break. And I did. I ended up counting it as a structure break. And that's why I entered the trade at 66.58 on this wick right here. And going down to the 15 minutes. You guys see it better now. Like, sellers are obviously winning this battle, right? So I told y'all that a doji is a neutral candle. And usually the candlestick that comes after that is who won the battle, right? So after these candlesticks, like, just continuously looking like this, we finally got some real momentum. We finally had got some real momentum. So I entered on this candlestick right here. It pulled back a little bit, but I entered at this candlestick, and then that's when it sold all the way down to here. So that's why it's very important to learn how to trade on smaller structure, right? On major structure, we just started to keep going back and forth, but it wasn't no clear direction of where the market wanted to go. But we got down to the smaller structure. We see market is continuously riding this trend line. Candlesticks are getting smaller and smaller. Buyers are losing momentum. And then boom, sellers pop into the market. Sellers popped into the market and showed that they won this overall battle and that they're about to sell this market back down. Now, I know you guys may say, like, well, why wouldn't we buy right here? Like, you know, isn't it kind of respecting the trend, kind of respecting the zone? Look at this. So right after this candlestick, we got a selling candlestick, for one. For two, yes, I thought I felt some color on, but mark. What did it fail to do? It failed to come back above this level. So because this candlestick sold, it failed to come back above this level. And even over here, it still failed to come back above that level. So twice it failed to come back above the previous high, creating a higher high. And you see right here, momentum is not in their favor. It's not in the buyer's favor right here. So with that being said, it's like, okay, no, a buy is not valid right now. The buy is not valid. Plus, it had already broke this trend. Like it broke it and it just started to ride along the trend, but it never really just came fully back above the trend line. It never fully came back above the trend line. So with all that, giving me clear indication like, okay, buyers are obviously not in the war no more. Like they're not in this battle. So now I'm just looking for confirmations that sellers are in this battle. They're still fighting. And this was my confirmation right here. This was my confirmation right here. So that's why I entered that trade. And that is when you would like to enter that trade, right? Now, some people may have entered right here. You know, you may have entered a little bit early. That's okay. You just got a minor pullback. You just got a very minor pullback. You know, there's nothing. This pullback right here, literally 30 pips. That's nothing. So yeah, you would have just had to go through a little bit of pullback. That's fine. So you still would have won that trade overall. Even if you would have entered, like once it retested right here and then sold down, you would have been like, okay, this market, you know, it retested, now it's selling back down, rejected, blah, 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 blah. That's fine. You just would have had to go through a 30 pip pullback, but overall, you still would have won that trade. You guys know that when I'm trading based off of structure, I set my stop loss right out outside of structure, you know. So my stop loss, let's see what the previous high was. Previous high was right here, right? Previous high was right here, right before it broke structure. So where is it? Here. So let's say you entered right here. I would have set my stop loss at least 20 pips, 20 to 30 more pips outside of the previous, depending on what I'm trading on. I do depend on what I'm trading. But in this instance, I probably would have set it like 20 to 30 pips outside of the previous structured area or the previous high, which is right here where you mark these black lines, and trade to a 3-to-1 ratio. So 2-to-1 to 3-to-1 is always good, but so it went to a 2-to-1 ratio. You would have hit TP. 2-to-1 to 3-to-1 ratio is always what you want to trade on. You know, you don't get too greedy and try to go for a 6-to-1 ratio and no. Or you could have just traded to the previous structured area. So like I said earlier, if the market, like right over here, we see these big buyups, right? We got these major buyups. So we know that if the market wants to pull back, where is it going to pull back to? It's going to pull back to the opening of these candlesticks. It's going to pull back to where these candlesticks open. What did the market do? It pulled right back to these candlesticks. Actually, it went a little bit further. Or let's say you started and broke the trend. You wanted to trade it to zone. Where's your past zone at? Right here. So this would have been your past zone. Right here. This is the bottom of the past zone. So like, that's how I would have set that trade up and took my take profit. But that's usually how I like to set my TPs and my take profits. it's better to trade structure to structure, honestly. But you want to try to, if you can keep that structure in the 2-to-1 or 3-to-1 ratio, that's perfect. That's great. If not, you know, catch the pips that you can and take your bag and get out the market, you know. But in that instance, it was in a 2-to-1 ratio. So it worked out perfectly. But that's how that would have played out even if you would have entered early. You still would have been fine. You still would have been perfectly fine. So that was the trade for Euro NZD. Now I did come back later on in the week. If y'all watched that video, I thought that the market was going to give me like an inverted, well, kind of like a head and shoulders pattern, not inverted, but give me a head and shoulders pattern. And I thought I was going to come up here and reject down. But you guys see, it did not do that. That's why it's best to trade reacting to the market instead of predicting the market. Now, yes, in this case, I'm not gonna lie, I entered this trade, and let me show you guys why. I'm gonna show you guys why I exited this trade. So we got the retest of this area, right? I was looking for the head and shoulders pattern. Everything was looking good. You got the doji right here. You know, buyers are losing momentum. Candlesticks are getting smaller and smaller. And then it sold down. I entered over here in this area somewhere. I think it was on this candlestick. So sold down after I entered. We was in good profit. Good, right? Everything looking good. It pulled back, then boom, then pulled back in. It just kept going back and forth, right? So if we look here, this is over the span of 12 hours. 12 hours and 15 minutes. If the market does not make a move within, I'm gonna be honest, if the market does not make a move within, I'll give you at least like 3 hours. Then when you're trading like this, at least, if it does not make a move within 3 hours, break even, like close out on break even or close out in profit, because that means it's not enough there in order to move the trade in your direction, right? Because if we look at every other structure, right, once it broke this trend line, I keep doing that. Oh, I want to. Okay. I don't know why I kept doing that. But anyway, once the market broke and we went up here and stuff like that, it took maybe, I'm gonna go off the retest because that's what we trade off of. 3 hours and 15 minutes, or 3 hours and 30 minutes before it sold down back to here. So it took 3 hours and 30 minutes. Like, and that's when it finally made its move, and then it just went on continuation. So that's why, like, I don't want to hold trades like this for too long. So that gave me a reason to exit out of this trade and then see what the market wants to do. And luckily I exited, because it would have came back and smacked my stop loss, and then it would have made the move that I wanted it to make. And I would have been highly upset with that, because if you trade long enough, you will know that the market will tend to do that. But I'm glad I closed out, because it went in the direction that I wanted it to go in. It just took a while. You know, it took a while. So that's why I closed out of that trade, and I just let it be. I actually didn't even come back and look at it. I'm not even gonna lie. I closed out of it and I was like, okay, I'm done. I'm done trading Euro NZD for the week. You know, I'm good. So That was Euro NZD. Now, did that make sense to you guys? On like why to exit out of a trade, basically like an exit strategy, almost.
As far as I know, it's like once you see the if it breaks your what's it called, not stop loss. Well, you have yours marked up, but if I had mine, I probably once I saw that it kept. It's not when it reached the consolidation, but more so. I don't.
Because that is
Say that again.
out of this trade as well. Once we saw that it broke our structure right here.
Structure, that's the word I was looking for. Okay.
Yeah, like once we saw that it broke our structure right here, that would have been another reason to close out of this trade. I just closed out before the end, so I went over the reason why I closed out of it. But that is another great reason. Like once you see that the market is consolidating, it's not really creating lower highs and lower lows like we want to see, then as soon as you see a break above here, okay, yeah, I'm about to get out of this trade. And you just gotta accept that loss. But you gotta be grateful for that as well, because why? You just cut your loss to a minimum. Like you actually just saved your account, because this could have broke above and kept on shooting up. Like it could have broke above and kept on shooting up and then went on for like ain't no telling how far. Or it could have went all the way up to your stop loss and you would have just took your maximum loss. But no, we cut our loss short because we closed out right here as soon as it broke, or right here. You know what I'm saying? So that's another reason to close out of a trade as well. As soon as you see it break back above the structure that you're trading off of, close out of that trade. Close out of that trade. Because if you're trading based off of this structure, right, you want to see the market reject off of here. You don't want to see the market go above it or go below it. So even if it goes above it just a little bit and then comes back down, okay, trade it when it comes back down into your area. You know what I'm saying? Like, yeah, I could have traded it right here on this candlestick and then caught the real trade that I was looking for. But as long as it's up here, no, I'm not finna trade looking for a sale. Or I'm not,
because way past the structure that you the trend.
I'm trading off my resistance or my supply zone right here. So it's like I'm not finna trade off my resistance if the market is above my resistance. You get what I'm saying? Like if it broke above my resistance, then I'm not finna look for a sale still.
Okay.
Like I would have looked for this right here. If the market broke above my resistance, you know, I'm looking for a sale in this situation, right? And let's say the market reacts like it did. I would have looked for the market to go up and come back down and see if it were going to reject off my resistance and buy back up. In that situation, then I'm changing what I'm looking for. I'm now looking for a buy instead of a sell, right? Because we know how the market moves. We know that, well, we don't know. We know that the market tends to move in patterns. Let's just say that. So usually once it breaks a structured area, it comes back and retest, reject off of it, and then buy back up some more. That is what we call an impulsive move, correction, and continuation. But no, the market didn't do that. So I would have looked for the market to either come back into my area and then come back and retest my resistance again and then sell down, which is slightly what it did. It didn't come all the way up, but that's the move that it made. But as long as it's above my resistance, no, like I'm not finna try to force an opportunity that isn't there. You see, with both of these scenarios, there are two separate opportunities that could present themselves, right? We're reacting to the market. So these are two different trades. These are two completely different trades right here. And we're just waiting to see which scenario plays out. It's okay if the market breaks above your resistance or breaks below your support. Okay, try to figure out what could possibly happen next, or see where the market is going to go to next. All right, let's see what zone is going to move to next. If we zoom out of here, I could bet you like this pull back to another area. Yeah, exactly. I told you. Where did it wick out at? It wicked out in this zone right here. So once it had broke above our resistance, how did we know where the market was going to go to? Because we have this structured area over here. Once it broke above our resistance, okay, where could the market move to next? Let's look to our left. Okay, where is a previous high? Oh, right here. This is where a previous high was. Okay, the market could potentially move there. So since it broke above our resistance, let's see if I can catch a buy up to this zone. Because since it broke above my resistance or broke above this area of structure, it's more than likely going to move up to here. You catch this buy up, then once it rejects off of this area again, sell. Like that's how you react to the market. That's why we say react to the market. Boom.
That's why you be saying look to the left. Okay.
Yep. Always look to the left. Look to the left. I'm telling you. Because more stuff will line up that way. A lot more stuff will line up that way. So the market didn't reject off of the point that we wanted it to reject off of. It didn't reject right here, but it broke above my resistance. It went to the next level of structure or the next zone, and then it rejected off of there and sold all the way down. So if I would have continued trading Euro NZD, I would have traded this sell right here, and I probably would have closed out at this level right here. But if I would have been paying close attention, like let's say I didn't set a TP and I was actually watching my charts, I would have saw that momentum for the sellers going right past my resistance. I would have held that, and then I possibly could have traded it all the way down here, giving me a total of 100 pips, 117 pips. How many pips do I say you need to really try to look to gain off a trade? 100. 100 pips is always a good goal. If you can catch 100 pips a day, you good. We just got 100 pips off of one trade. How long did it take? 8 hours. An 8-hour trade for 100 pips, it's fine. Profit is profit. So it's like, that's how you react to the market. Don't try to force an opportunity that isn't there. That's why I closed out of my trade. Because that opportunity just wasn't there. So continue, like trading is just reacting to the market and also continuously looking for new opportunities that present themselves every single time. And that would have been a new opportunity. All right, so now let's go to GBP JPY. I didn't trade GBP JPY. On Euro USD, I did trade Euro USD. I caught the buy up. So here to here for Euro USD. Again, impulsive move, correction, continuation. So here, hold on. Let's go through the full markup. Because I don't mean to brag on myself, but I'm just saying, y'all. I'll be knowing what I'm talking about. That's why I started this course, to help other people learn, to make it all simpler. So when I'm right, yes, I'm gonna talk my stuff. I'm not gonna lie to you. I'm gonna talk my stuff. Cause I know it's a lot of people looking to see me fail. since I'm not with an organization no more. I know that. A lot of people are like, oh, let's see if he can survive on his own. Yes, I'm surviving on my own right now. So with this, we got two structure breaks, right? We got two. I told y'all I was looking for the buy. Euro USD. I missed this one right here. But again, right? New opportunities always present themselves. You may miss one trade, but look to catch that another. So impulsive move right here. We had a previous high. So we had a high and then we created a lower high. So this is our previous level of structure because this is the most previous high before the market sold back down again. So we got the impulsive move breaking above this high right here. It goes back. Then we got the correction. Pull back to that level again and reject it off of it. That's exactly what we want to see. So right here, it rejected off this level and it bought up. It did exactly, y'all. I'm gonna show you. I'm gonna show y'all that I'm not cap, bro. Because let's go to the Telegram chat. Let's go to the Telegram chat. Because no, it's not what I'm looking for. I sent this out before it made its move. Yep, right here. So Euro USD, I said update for Euro USD. The market was currently right here, right? It didn't even touch this line yet. It didn't even touch this line yet. So it rejected. I said it was going to reject off of this point because we had got the impulsive move. I was looking for it to reject off of this point. It was going to come down here. So it played off of the first scenario and rejected off of this point and then bought up. I said it was, once it bought up, what was it going to go to? This trend line. And I'm going to show y'all that trend once we get back to the charts. I said we're going to go up to here. If we're going to reject off of there, then boom, because we have a secondary trend also within another downtrend. So our major level of structure is a downtrend, but our secondary level of structure is also a downtrend. Yes, you can have two downtrends. Yes. In this case, I actually have three. But here, point A to point B. So if it was going to break this downtrend as well, it was also going to retest that level of structure. Now, where does that level of structure lines up? This downtrend lines up right with our support. That's double confirmation. If your uptrend lines up with your resistance or support, that's great. If your downtrend lines up with your resistance or support, or even supply and demand zones, that is great, guys. That's what you want to see. So here in this case, our downtrend lined up right with our support. So if the market rejected off of here, it was going to buy up. I sent that before that even happened. Oh, tweaking out, boy. So what did the market do? Came up and then came back down. It rejected off of the trend line, then boom. Now, if I go to the weekly chart, this is where my other two trend lines came from. I think I marked this up on a daily action. So yeah, this is where my other trends came from. That's how I knew it was going to come up to that level of structure, because it had an impulsive move. Guys, this is just structure within structure within structure. Literally structure within structure within structure. We got our daily chart, right? That's our major structure. Then we had our 4-hour structure. And then we had our 30-minute structure. Like, it's just structure within structure within structure. I always say You have to trade the minor to trade the major. So that's how I knew that, like, if the market, once it broke this trend, the next level that was possibly going to pull back up to was this major structure right here about a downtrend, because we got the impulsive move. Now all we were waiting for was the correction. We were waiting for the correction, and then it sailed back down, which is exactly what it did. Now, as of next week, what I'm looking for, I'm not really sure yet. Because it could go either one or two ways. The market is either going to create a higher low and then continue to go up, or we will see, or it's going to reject. This may just be like a little buy up day, and then it could continue to sell down. Now, with the news coming out for the US dollar is kind of bullish right now because nobody is scared of the new variant. I'm not sure we can still say code on YouTube, but the new variant that comes out, like, nobody's scared of it. Nobody's really worried about it. So people are still pumping their money. So that's what happened with Euro USD. Now this right here, I told y'all, like with the DSY, that's what caused it. This, you guys see that it's in the same exact spot, right? These candles are in the same exact place. This happened at 8 o'clock. 8 o'clock, same day. So, like, yes, this candle happened, but we know that's not regular market movement, right? That's not regular market movement. That's stuff that you see on NFP week. Like, that's just what happened. So that's why, like, okay, I just ignored that. I didn't count this as a break of structure. No, because what happened right after? It bought right back up above this trend line, and then the market started to move back normally, right? So that's why I just kind of ignored this. And I told y'all in the group chat, like, let me see. Yeah, right here. I'm like, look, the market will be volatile because we're in the middle of news. Be patient and disciplined. Like, just wait. Let the market move its course. Like, do what it do. Just wait. And then our real trades are going to present themselves afterwards. And that's what happened. So right now we're in the middle of the market rejecting off of this trend line and buying up right now. So that's what we're looking at. Right now it's up right now it's up 50 pips. So ain't no telling if it's going to go all the way up here. Don't know. But this 50 pips for somebody is $50,000. That's all I know. So it's not about catching 1,000 pips moves or all of that. No, it's about consistently catching profit. If you can consistently be profit, I don't care if you're catching 50 pips, 100 pips, 500 pips, I don't care. Are you profitable? Yes or no? And if you're not, then it doesn't matter. That's just like how people say, oh, I made this much money and da 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 in a day. Did that money hit your bank account? Yes or no? If it didn't, it doesn't matter. If you lost all that money the next day, it does not matter. Focus on being profitable. It's a difference between being profitable and making profit. That making all that money in a day, but it's not hitting your banking account, that's making profit. Being profitable is when you make that money and you're able to actually see that money in your bank account or touch that money in your pockets. That's when you're profitable. That's the difference. A lot of people make profit in the industry, but not a lot of people are profitable. Why? Because of discipline and their mentality. But enough rambling. On to Gbp USD. Now this trade right here, good for the sell, not good for my buy. So we had got the break right here on the trend line, and then it rejected. It did reject, or it did correct itself, but I did not think it was going to correct itself that much. So this one, I think I did end up losing some money on this one because it did reject off of the zone that I wanted it to reject off of. So my first two entries I lost, which was the real trade. And the reason that I lost it, because I was in profit. I entered right here. Truth be told, I entered at 33,018. 33,018. If you don't believe me, I kind of maximize this because I don't want to show everything, but I'm sending it in a group chat. But anyway, I entered at 33,018 and I popped the second entry on this at 33,208. So I entered this trade twice. Yep. 208 was right here. I had a caught the initial buy up, boom. I traded the higher low and then caught it back up some more. Now, me, I did not move my stop loss into profit. That is why I lost this trade. Otherwise, this trade would have been a win. I did not move my stop loss into profit because I did not expect the market to react like that. Like, I did not expect this long candlestick to come down and knock me out. But it did. It is what it is. Live and you learn. So I knew once we got this impulsive move, we were going to get the correction, and it did react the way that I wanted it to, but I just got knocked out. Same principle as all of the other trades. What do we get right here when it comes back and retests this zone? Right? The market moves side to side. It consolidates for a little bit. It consolidated for 1, 2, 3, 4, 5, 6 hours. You guys know I like to see my doji. That's what I was looking for. I got my doji. I was like, okay, market may be getting ready to buy up. And then that's exactly what it did. So I started entered at 33,018. That was at the, I entered a little bit early. I had saw like right before this candlestick closed, it was moving up already. Because I saw my doji right here, and then I entered right before this candlestick closed at 33,018, and like I saw what I needed to see. I'm not gonna lie, I saw what I needed to see. I entered before the candlestick closed, and I went on ahead and took my entry. But even if we go down to the smaller time frames, over here, I still saw what I needed to see. Because look, yeah, it dipped below a little bit. It dipped below right here. What happened? Immediately bought back up. It dipped below again right here, but what happened? It failed to close below this area right here. It failed to close below this area. So I'm like, okay, this is still valid. You know, if it would have kept continue making lower lows and lower highs, I would have been like, okay, it might go a little bit lower, but it never did do that. So I'm like, okay, my buy is still valid. You know, even on higher time frames, this is just a wick right here, as we saw. This is just a wick right here. So my impulsive move, boom, right here. I got my double bottom confirmation, and I bought this trade up. The double bottom on a smaller time frame, that's when I entered. Bought this market up, and we made our money. Well, we were going to make our money until it came back and did what it did. So that's why I entered that trade. Do that make sense to y'all?
Yeah, I'm with you.
All right. So from the moment I entered that trade, it traveled up 64 pips. But I know that this is an irregular move. That's why I wasn't mad. I ain't gonna cap. When I came and looked at my phone and saw that I had got stopped out. Like I had got stopped out of a lot of trades that I was in profit in. I got stopped out of a lot of them. And I was like, bro, what the world? Cause like I looked at my account balance, I was like, bro, what just happened? Like, and I saw that this happened. I was like, bro, like I wasn't mad because I know like this doesn't, this is not normal. This is not because of my decision. Well, I could have moved my stop loss into profit. That was on my part right there. I should have moved my stop loss into profit. But this right here, this is not nothing that I can control. I can't control this right here. It's out of my control. So I'm not going to sit here and be mad about it. It happened. So it didn't buy up as far as I wanted it to. But that was Gbp Usd.
Question.
What's up?
So as far as like the time frame and everything, how do you know when you're gonna be in it for a long buy or a long sell, like, or whenever? Is it everything still based on the candles? Like the candle gonna tell you whether you're going.
As of how big I want to take a trade,
yeah,
I base that off of the level of structure I am trading on. So how big is my level of structure here? This right here, I'll mark this up on a 1 hour time frame. So yes, it dates back to a little bit over here, but it's nothing just real major, you know what I'm saying? Now, a trade like this, like if it comes down to this level of structure down here, this is a bigger level of structure for me. So I may hold this trade for like a couple of days, But that's why it's very important to always know your target before you get into a trade. So I knew my target. If I was to enter this trade right here, my target wasn't going to be no higher than this, right? Now, we don't know how long a trade may take. We don't know if it's going to go there in a day or a couple of hours. But I know that this is just not like a big trade. You know what I'm saying? Like trading from here to here, this is just trading zone to zone. This is not a major level of structure, right? So in that case, I'm only looking to hold this trade for it made the move that I wanted it to make within 3 hours, right? It made the move that I wanted it to make within 3 hours. So now it's just a matter of, okay, I know that I want to stick in this trade now. I know that I want to, hold this trade. I'm going to hold my wins. Now, truth be told, if that news didn't come out, it probably would have hit that TP. And let's see, 0318 right here. So by the end of the day, it would have probably smacked my TP by the end of the day. Because this is 17 hours right here. So before the news came out, it was moving in my favor. So that's a intraday trade, holding a trade for a day. Now, how would I know I would have probably hit TP in a day? Because of my level of structures here. So is this a major structure? Like, is this like a monthly level? Is this a weekly level? Or is it just a daily and 4 hour or 1 hour level? So I marked this up on a 1 hour level. I marked this chart up on a 1 hour level. So I would say for like my 1 hour to 4-hour levels, I'm only looking to hold those trade for a day. Now, for monthly, not monthly, but daily and weekly levels, I'm looking to hold those trade for a day or longer. You know what I'm saying? So basically, longer than a day. So I already go in knowing how big, like, or knowing where I want to take my trade. Now, that's another thing as well. Knowing your target before you hop into a trade. This is my target right here. It shouldn't take a week to travel from here to here. You know what I'm saying? Like, just from my experience trading, I know that it typically does not take a week unless there's like nothing going on in the news that could probably push it. But this week was NFP week. And I started off the week looking for bearish news. Then as the week went on, we started to get bullish news for the US dollar. So starting off my week, I believe I told you this Sunday, we were looking for bearish news coming into the market. So by Tuesday, everything should move to where they, should move to. Right?
Mm.
So Tuesday came and November 30th. November 30th was Tuesday, right?
30th, yeah. Yeah.
Yep.
Oh, wait.
Like, it would have played out. It would have played out right as I said it would have by Tuesday. But we got that news and it pushed the market down. So that's it's more so about knowing your targets. So the way that you know how long you want to stay in a trade depends on how big your target is. My target is from here to here. So I expect this to play out in a day and a half. No longer than 2 days though. From here to here. Now, if my target was from here, let's get rid of this. If my target was from here to this level, okay, now that may take like 3 to 4 days. You know what I'm saying? So that's a big gap. That is 200 pips for Gbp USD. Right? And then you can even look to your left. How long did it take for the market to travel from up here to down here? It took 7 days.
7 days.
Well, I don't know. Well, yeah, still 7 days. So it took 7 days, right? So you could have, okay, it took 7 days to move down here. Okay, let's see. I might take 7 days to move back up there. You know what I'm saying? So you could go based off of that. The market is going to tell you how volatile it is. It's going to tell you how quick it moves. You know what I'm saying?
Yeah, okay. Okay.
Let's see if I can find an example. All right, so we're going to trade, let's say this structure right here, right? Let's say you were trading off of this high to this low. Let's see how long did it take to travel down there. It took 1 day and a couple of hours. How long did it take to travel back up? The same amount of time. You know what I'm saying? So it's like, you could base your trade off of that. Okay, it took a day and a couple hours to move down there. Okay, I'm looking for this to buy back up at this level. So I'm going to hold this trade for a day and a couple more hours. If it doesn't make that move by the end, well, then maybe it's just creating a lower high and this is about to reverse back down. You know what I'm saying? So that's how that works. Like, go based off of what you see. Go based off of what you see. Don't try to tell the market, oh, you finna do this when you get to this level. No. Go based off of what you see. As simple as that. Okay, I see that it took a day to get down here. Okay, well then I see that. So now I'm finna hold this trade for a buy to buy back up to this level for a day.
Or about a day.
You know what I'm saying? Look, another example. Let's go back to gold real quick. Let's go back to gold. So let's say we're trading off of a level, right? Ooh, I hate the way I said that. I hate the way I just said that. Let's see if I can find a good example though. Okay, we can use this. I'll use this. Let me have my drawings. All right, so we see right here, right? Is my stuff gonna pop back up if I do this? I'm still being difficult right now. Ain't no one trying to do that. But anyway, all right, we see right here, we're on a weekly chart, right? So we see over here, the market enter consolidation in its zone. We see that?
Mm.
So once it got to this level, and my red little square box right here, the market was in consolidation for a while, for a couple of weeks. And then it sold all the way down. So what can we expect the market to do when it gets back to that level? Enter consolidation. That's exactly what it's doing right now. It's in consolidation because it's at a weekly level. It's at a monthly level. It's just looking to the left. What happened when the market was in this area before? It entered consolidation. Okay, it's in its area again. What is it doing? It's in consolidation. You know what I'm saying?
Yeah.
Do that make perfect
Pretty
sense?
much it's gonna make the same move eventually. It's just a matter of when.
What I said earlier, the market moves in patterns.
Yeah.
Once you learn those patterns, you good to go. You good to go, my guy. You finna make some money. So, and I ain't talking about candlestick patterns. No, I'm talking about real market patterns. Not saying that candlestick patterns aren't real, but do I care about candlestick patterns? Yes and no at the same time. All right, USD JPY, probably my favorite trade because it's not, well, I ain't gonna say my favorite because about every single trade played out the way that I wanted it to. But looking at USD JPY, I sent y'all this message. This was another message that I sent right before. Let me take out the red just so it don't confuse y'all. I know what I marked up. I'll put it back on there later on. But you guys can see where I started this point at. I started it right here, and I said, okay, this market is more than likely going to break this level right here, right? It was more than likely going to break the uptrend. And that's exactly what happened. It broke this uptrend. It broke the uptrend, and then it sold right down to the point that I was looking for. Now, in other pairs, we see that when that news came out, it dropped those currencies, right? Well, this is a currency where the US dollar is the primary currency. This is the base currency. The US dollar is the base currency. So we see a major buy up right here. And it came back, retouched the trend, and then sold back down to this level again. So I did not enter on the break of this. Why? Because we don't know when it's going to break. I didn't know that it was going to break exactly where I marked it at. Like, I didn't know that this was going to be the candlestick to make the count or make the breakup structure or start the breakup structure. I didn't know that at the moment that I marked it up, but I just knew that it was eventually, more than likely, going to break this trend line. Now, I also didn't trade the buy up. If you guys go to the chat, I was looking, I said USD JPY tanked. I thought I missed out because it tanked, like it was tanking for a good little bit. But I was just waiting on the retest. I was like, I'm gonna hop back in on the retest. And I even said in the market that I feel like it is giving an opportunity for re-entry though. Make sure to set an acceptable stop loss. So that's exactly what happened. It gave us an opportunity for the re-entry, gave me that opportunity, and that was when I entered on their opportunity. Oh, no problem, bro. Yeah, the rest definitely gonna be on YouTube. But came back and retested the trend line, and then it continued to drop back down. So I did re-enter right at the retest of the trend because I knew, again, that the news was just news. You know, the market was going to do what it do. And usually, you don't get two major candlesticks like this unless it's just something really, really big, you know, something really big going on in the market that causes it to move that way. Usually, you only see them moves in like Nas and stuff like that. But the market did come back and retest this trend line, and it dropped. I entered up here at the trend line. That was where I entered at, or about at the top of this wick. So I had my alert set. You can kind of see the clock right here. That's why it's very important to set alerts, guys. Like, you ain't got to look at the charts all day. When that alert goes off, you know what's going on. You know where the market is at once that alert goes off. If you guys don't know how to set an alert, you can either place like a horizontal line or trend line, click on it, and click on this clock right here. And it'll allow you to edit it however you want to. You could make a note for it. You could say when it's crossing. I just leave it always on crossing. Like crossing up, crossing down. You could put it on crossing up, crossing down, greater than, whatever. I just always leave it on crossing. And then I say once per bar, or you could say once per bar close. I like to leave it on once per bar though, because that lets me know like, okay, the market is moving right at this point at the exact moment. Or you could say once per minute. If you're a really busy person and you move around a lot, you could say once per minute that the market moves at that trend line or around that point. You can leave an alert name. For mine, you guys see mine, I say look for buy or buy, look for sell or sell. You know, I leave alert names for myself so I know which point it's at. So that's how you set an alert right there. But USD JPY went exactly to plan. I entered right here at the retest. I didn't even need to see a rejection, but if you guys want that confirmation, what do we see here on the 15 minute? We got this literally only happened for 15 minutes, guys. Happened only for 15 minutes. We got the big buy up, and then look, this candle right here. Look at this candle. We got that major rejection, which showed me what I needed to see. It showed me what I needed to see. So we got that major rejection wick, and then the rest of the candles after that, boom, sell. So you would have entered off of this candlestick right here. If you wanted to, wanted all your confirmations, you would have entered off of this candlestick right here. So at the opening of that candlestick, because you got the rejection And then you got the selling candle. That's what you needed to see at the points that you were trading at. That was the confirmation that you needed. Plus, I knew that this was just an abnormal move. So I knew that the market was going to correct itself after that. All right, so USD Cad. Last trade of the week. Perfect trade. I think this was actually my favorite trade. USD Cad was my favorite trade. This one, I used the field. And we had it come up to a level of structure, the demand zone, and our resistance line. And this is also a major level of structure. So this is actually a monthly level right here. You guys see, this is a monthly level. This is what we call a monthly level. So basically, it's like just like how we trade, you know, on the smaller time frame using support and resistance. You read the monthly and the weekly chart just like that. You'll mark up your weekly chart just like you trading on a 4-hour time frame, and that's how it becomes like a monthly or a weekly level. And even if you want to even label your stuff, like let's say your monthly and weekly levels, you could make them black. Then you go down to the 4-hour time frame, you know, smaller levels, so you'll make them a lighter color. You can make this yellow, you know, this is a smaller level. So you could do it like that in order to help yourself stay more coordinated. But USD Cad came down to, or it came up to a monthly / week. Well, I'm gonna call it a monthly level. It came up to a monthly level, right? Now, what we say about monthly levels, the market is going to consolidate on a major structure. So on a major structure, the market is kind of consolidating right now. But you could have caught this minor move right here, this sell down. So it came down to a monthly, or it came up to a monthly level, my bad. And it retested a support level. I mean, not a resistance. It retested my resistance. Not only that, on my field, it retraced back up to a reversal point. My negative 61.8. My negative 61.8. So not only did it come up to my reversal point was also in a strong level of structure. So just based off of that alone, I knew, I hate to say I knew, but I pretty much like felt that the market was going to drop. And that's exactly what it did. Market dropped another 100 pips. It dropped another 100 pips. So when you have all type of confluence like this, guys, when you have confluence like this, you could enter at pinpoint like entries. You could have took this trade right here at the tip of the top. You could have placed an entry right up here. Or let's say you saw this candlestick, you wasn't confident enough, so you would have waited until the next candlestick came out. Okay, well, this is the next candlestick, right? We didn't get 2 consecutive bullish candlesticks. No, we got a rejection. We got a rejection candle right here. So we got the rejection candle. Let's say you wanted to stay a little bit more patient and disciplined. Well, then that's okay. Waited a couple more. What's happening right here? Rejection points. We're getting rejection wicks. That's your confirmation right here. And then you enter right here on this candle. So this is how this trade will look. Trading zone to zone down here. and I would have set my stop loss right outside of this structured area. Boom. And look at how this trade played out. Now, 3-to-1, you usually have 3 TPs. But since I used my fib on this, I used my TPs based off of my Fibonacci. This was my reversal point, and my TP was set all the way to my re-entry level for like if I was getting in for a buy. Now, well, I'm gonna show you just for a visual example here. Boom. And that's when I'm trading off of structure. But even looking at my fib, right? I traded off the reversal, but I also could have traded off the buy. So from low point to high point, this is how my fib was marked up. Boom. No, it was from here to here. Yeah. It was from here to here. This is where my field was marked up at. Then the news came out that pushed it up to the reversal, and that's when I caught the sale. So then, based off of that, my re-entry is at my 0.70, and my stop loss would have been a little bit outside of this red line, but trading off of this right here, caught my re-entry right here, we could have caught the buy back up to that zone as well. So that's how that trade would have went for that. So you would have caught 100 pips down and then 100 pips back up. So that's how that trade played out for USD Cad. That's where I would have entered that. And then if I'm using my field for a trade, I enter based off my points of the Fibonacci. So if I see that the market is rejecting off of my field points, that's where I enter the market. So I saw that it was like rejecting off of my 0.70. I entered at my 0.70. I didn't want the candlestick confirmations. You're technically still getting candlestick confirmations, but I didn't wait for like the 2 consecutive engulfing or nothing like that. I entered once I saw the rejections. So got the rejections, and then that's when I entered at the 0.70, caught this buy back up, and then you even could have caught it again right here and caught 300 pips just off one trade. Or one pair, I mean, but 3 different trades. So that's how I trade based off the field. All right. So those were all the trades that I took this week. Now, I'm just going to go over the calendar. I'm not going to get deep into the articles. Because this is already a very, very, very deep analysis. But I wanted to like go in full detail with you guys. Because this week was a great week, and I wanted y'all to understand like why I took the trades that I did. And why I readjusted my trades as well. So once this load up. All right. So we know this week was NLP week, and we were expecting a lot of news, right? So the news for the US dollar came out Tuesday that pushed the news or pushed the market the way that we wanted it to. Like, if we look at these right here, the news came out bad, right? That's what hurt the US dollar economy. That's what pushed those trades the way that we wanted it to. And then right at 9:30, I mean, not 9:30, but 9 o'clock, that was when Chairman Powell had spoke. So you guys know whenever he gets ready to speak, you need to pay attention to what he's about to say. And I may not be in trades anymore. Like, I may not, if I'm in a trade, I may close it out like right before he speaks now. Can't no telling what bro gonna say and how it's gonna affect the economy. So I may start closing out my trades before he speaks and then reevaluate my trades after he speaks. But this is what pushed our trades in the direction that we needed them to go in before. Like, this is what had us in profit. The HPI came out worse than what we expected. Chicago PMI came out worse than we expected. And the composite came out worse than what we expected. So that hurt the US dollar economy. But that helped our trades that we were in at the moment. We were in for a buy on Gbp Usd. We was in for a buy on Euro USD. We was in for a buy on gold. We was in for a sell on USD JPY. We was in for a sell on USD Cad. Like, everything was working perfectly. Everything was lining up. So once our fundamental, that's how our fundamental lined up with our technical. So once your fundamental and technical lines up, you guys saw what happened. Then Chairman Powell spoke. That's when we saw that volatile candle, that major candle that pushed the market in different directions, depending on what pair you was trading on. And then from here on out for the US dollar, it was more so bullish news besides here. But didn't nobody care about this. Like, the US dollar was still bullish because of the unemployment claims came out better, and it was something else as well. Yeah, the unemployment rate. So yeah, unemployment claims and unemployment rate came out good, even though the non-farm employment, came out worse than expected. The unemployment rate and everything else recovered for that. It covered for that. So that's what made the US dollar bullish for the rest of the week and pushed those currencies the way it did. And if you guys do not know, I'm on forexfactory.com. That's how I look at my calendar. And if you guys not go to investing.com for my articles whenever I want to read deeper into stuff. So that's what I use. But that's how I was able to use my fundamental analysis along with my technical analysis to make it all simpler. If green numbers pop up, that's good for the economy. If red numbers pop up, that's bad for the economy. So let's say, also, if it has a red folder, it's going to heavily impact the economy. So if we get green numbers for the US dollar and it has a red folder, then it's going to be good for the economy. It's going to push US dollar up, which is going to momentarily push gold down, Euro USD down. It's going to push GBP USD down. So if we go back to the charts, we had got good news, right? For the US dollar, what happened to USD Cad? USD Cad bought up. Why? Because the US dollar is our primary currency. Let's look at when that news came out. It came out 7:30 a.m. is when that news released. 7 o'clock. 7 o'clock, the market was already making bullish moves up. So, the market always give you an indication of what news is going to come out before the news even drops, to be told. So you guys see, like, when that news dropped, right? It pushed currencies up. Let's go to GBP USD. Look, it's dropping. Why? Because the US dollar gained strength. And then Euro USD was consolidating because good news came out for the Euro as well. So if good news come out for the Euro and US dollar, it's going to consolidate for a while. Same thing for the Japanese yen. Good news came out for their economy. So it's going to make the market consolidate. That's why it's very important to pay attention to the economies that you are trading. Pay attention to the economies that you are trading. So that's going to wrap up our weekly review, though. But thank you guys for watching. If you guys enjoyed the video, please leave a like, comment, subscribe, and turn those bell notices because we got more gems to drop. If you guys want more videos or want me to go over something in my videos, definitely leave that in the comments as well. I will be glad to do it. Like the more y'all want me to teach, the more I will learn myself. I learn more and more every time I do these type of calls. So that's only going to help me, and it's going to help you guys as well. But again, thank you guys for watching. I hope you guys have a nice day.